Hey guys, and welcome to my YouTube channel. If you are new to this channel, you know what to do. Hit the like button, hit the subscribe button, and do well to turn on the post notification bell icon because we are in for this series this year 2023. Alright, so for those of you that are seeing me for the very first time, I'm Dr. Neil Emmanuel, founder EMFOREX Academy, and I'm here to actually share my experience with the YouTube community. And I'll be giving an introduction, more like a series, to technical analysis. Under the technical analysis package, I have about 4 different series on technical analysis. So I'll be breaking it down to a simple language that each and every one of us can understand and can digest within a short period of time. Okay, so without further ado, if you've liked this video, if you've shared, and if you've turned on the post notification bell icon, now it is time for us to go into the main reason why we are here. And the main reason why we are here is for technical analysis. So I have some series of slides that I've prepared for the course of this video, and I'll be explaining those individual slides. Okay, so do well to stay to the very end because I have something very special for you at the end of the video. Okay, I'll be sharing with you a strategy on technical analysis. So let's go, guys. Alright, so technical analysis is becoming an increasingly popular approach to trading, thanks in part to the advancements in charting package and trading platform. However, for novice traders, understanding technical analysis and how it can help predict trends in the market can be daunting and challenging. Okay, technical analysis is the study of price movements in the market, whereby traders make use of historic price patterns and indicators to predict future trends in the market. It is a visual representation of the past and present performance of a market and allows the trader to use this information in the form of price action indicators and patterns to guide and inform future trends before entering a trade. This technical analysis beginner guide will introduce you to the basics of this trading approach and how it can be used to trade the financial markets. Alright, so basically technical analysis is all about understanding previous events that have happened on the market and how it can actually contribute to the present market conditions. Okay, you've seen the market go up and down over a period of time. It has happened so previously, so now we're actually looking at the way whereby we can see those patterns, those footprints the markets actually printed for us while leaving a particular level or while trading off a particular zone. Okay, so we recognize those levels or those patterns or those footprints and then maximize those opportunities to make profits. That is what technical analysis is all about. Alright, so if you find it difficult to understand what technical analysis is all about, drop your question in the chat section. I will be attending to them. And now, understanding technical analysis. Technical analysis involves the interpretation of patterns from charts. Traders make use of historic data based primarily on price and volume and use this information to identify trading opportunity based on common patterns in the market. Different indicators are applied to charts to determine entry and exit points for traders to maximize the trade potential at good risk-reward ratio. Okay, so on the markets, what we actually understand is the charts. We see candlestick rising up, we see candlestick coming down, as the case may be. Those are the information the market is giving us. Okay, if you don't understand what those candlesticks simply mean, if you cannot interpret the patterns of those candlesticks, then you find it very difficult as a price action trader or as a technical analyst to see future trends in the market. Now, if you can actually identify these patterns or these levels, then you can have a good value for your money in the sense that you can risk little to make good amount of profits. Okay, so now this is the way the market is as from the technical standpoint. Okay, from this technical standpoint, this is the way you can actually see the market. You see the market in terms of charts. Fundamental traders sees the market in terms of figures, in the sense that they see some certain news events could affect the market, some certain economic events. I call it the intrinsic value. Okay, some intrinsic value can actually uh, affect the market to give it a change either to the bullish side or to the bearish side. Okay, so now, while advocates of fundamental analysis believe that economic factors are the main contributors to movement in the market, technical analysis traders maintain that past trends can assist in predicting future price movements. Although this trading style can vary, understanding the differences between fundamental and technical analysis and how to combine them can be extremely beneficial. Do you understand? So for you to know how to use technical analysis and fundamental analysis will give you an edge in the market. Okay, will give you a good edge in the market. That is where you see people who say, okay, I'm a professional trader. Why? Because they are able to balance up the fundamental aspect of trading and also what the technical aspect of trading. Most of them are 90% technical and 10% fundamental, while some of them are 80% 20 fundamental, as the case may be. Some of them are 80% fundamental and then 20% technical, depending on the kind of trader you are. Okay, so let's continue. So how technical analysis can help traders. Okay, many traders have found technical analysis to be a useful tool for risk management, which can be a key stumbling block. Once a trader understands the concept and principles of technical analysis, it can be applied to any market, making it a flexible analytical tool. Where fundamental analysis looks to identify intrinsic values in the market, technical analysis looks to identify trend. Okay, now let's settle this once and for all. Okay, technical analysis looks to identify the trend of the market. Now there are so many factors that could cause the trend of the market. Okay, so many factors. I don't want to go into them, but majority of them are caused by fundamental news events. We have the non-farm payroll, we have the CPI, core production index, we have the PPI, we have FOMC, we have there are so many. We have interest rates, so many news events that could cause the market to push in a particular direction. Okay, so now technical analysis looks to identify those trends. Now once the market gets a particular movement, which is a trend, technical analysis looks to identify those trends, sometimes even before they form. Alright, because there are patterns the market creates, flags, pennants, and the rest. The market creates while moving in a direction that is showing you that, okay, now the market is ready to do what? Go the opposite direction. Okay, which I'll be explaining to us shortly. Alright, so benefit of using technical analysis includes the following. Before you can make effective use of a particular thing, you need to know the benefit, the pros and cons of using that particular instrument. Okay, so you cannot use technical analysis if you don't know the benefit. So why are you using it if you don't know the benefit? If this cannot help my trading life, why am I applying it to my trading? I know most people see ICT traders, some people, they call them smart money. If you don't know the benefits, if you don't know what those people are looking out for, you cannot make effective use of their strategy. That is one thing you need to know. You need to know what that particular thing has in stock for you before you can make use of it. Okay, so now the benefits, he said it can be applied to any market using any time frame, which is true. Now technical analysis is not restricted to any single time frame. You can identify a pattern on the 1 minute time frame, identify a pattern on the 15-minute time frame, identify a pattern on the 1 hour time frame, as the case may be, and it's going to play out smooth. As long as you do what? You manage your risk properly, you are going to be in a good movement. Okay, now technical analysis can be used as a standalone method, which is true. Many beginner traders don't know anything about the fundamental analysis. They don't know what makes an economy go into recession. They don't know why a particular movement, you will see that the actual is greater than forecast, which is meant to give strength to the currency, but you see that the expectation happens to be the opposite. Okay, they don't know the reason why those kind of situation happens. Okay, and but still yet they call themselves traders. Okay, I'm not here to throw shots at anybody, but it shows you that technical analysis can be used alone without adding any single bit of fundamental analysis. All right, so allow traders to identify trends in the market. You've heard this popular saying that the trend is your friend, the trend is your friend. Of a truth, the trend is your friend. Reasons because if you are trading in the direction of the trend, you make profit. The moment you go against the trend, either as a scalper, a day trader, a swing trader, a position size trader, a position trader, whatsoever, you go against the trend, you lose whatsoever amount of money you are risking. Okay, so that's just it, and there are so many other benefits. I just picked out these very few points so that we can just quickly run through. Okay, so using charts in technical analysis, the below charts below charts is an example of a candlestick chart of Euro USD currency pair. So this is the way the candlestick looks like, which we'll be going over to the chart in no distance time. Now this is the way the chart look like. I know most of you have seen are quite familiar with this. I know most of you are not familiar with it. If you know you are familiar with the charts, drop in the comment section your favorite currency pair. Okay, your favorite currency pair, and if you know you are not yet familiar with the charts, drop in the chat section that I'm not familiar with the charts. Okay, like I said, the trend is your friend, so I'm also your friend. Okay, as long as I'm giving you information that is trending, then I am your friend. This should be the best YouTube channel you should visit for any information relating to forex trading. It's going to be a journey with all of you on deck, so don't forget to subscribe. I said it earlier, and I'm going to say it right now again. Subscribe. If you've not subscribed to this very point of this video, you are missing out. Okay, so take 1 minute to subscribe to this channel, and then we'll continue. All right, so charts are key to technical analysis. It is because the most important measure of a market's past and current performance is the price itself. This is the starting point and delving into analyzing the potentials of a trade. Price action can be represented on a chart, as this is the clearest indication of what the price is doing. Charts assist in determining the overall trend, where there is an uptrend or downtrend, either over the long or short term, or to identify range bound condition. The most important type of technical analysis charts are line charts, bar charts, and candlestick charts. Okay, so we'll be going over to our trading platform. Here I'm going to be making use of the the trading view platform. Okay, so this is the way the chart looks. This is my current chart on GBP USD. Okay, so I will be bringing up a fresh chart. So I have some data I don't want to tamper with, so I'm going to pick up a fresh chart and then we'll dive in. All right, so now for those of us joining fresh, this is the way your chart is going to look like. Okay, this is the way your chart is going to look like. Now let's not talk about the colors of my charts. They are my own particular decision to make. okay, which I chose this color. But in a random chart, or the default setting for a bullish market is green, and the default setting for a bearish market is red. Okay, so whenever you see green, it means that the market is buying, and when you see red, it means the market is selling. So but I like it this way for some reasons, psychological also, and that is why I'm having this color of chart. So despite your color, it simply means the same thing, gives the same information, gives every single thing accurately. Okay, so now this is the way the market looks like. These are candlesticks. Okay, now the market moves in trend. Like I said, the trend is your friend. So the market moves in series of what? Highs and lows. So this is a lower low, this is a lower high, this is a lower low, and now this should be a lower high compared to this low here. So now so far this is just the current move. I'm just taking account of the current trend. Okay, so now so far so good. This trend is bearish. From my screen here, I don't want to go too much back. Okay, so this is current price action. Okay, so the current trend is bearish based on the formation of these movements you can see here. How did I know? I didn't come with it, I saw it and I was able to recognize it. Okay, so once the market creates lower low and lower high, now it is said that what the market is in a downtrend. And when the market creates what? Higher highs and higher low. Let's see if we could get higher highs and higher low. Exactly. Okay, so we have series of higher highs and higher lows. So let me be marking them out here. So what we have here is, this is a low, this is a high, low, high, low, and this should be a high. Okay, but guess what? Okay, it's extended here, but I want to explain what just happened right here. Or should I skip? Let me skip for the next video. Okay, so now in a bullish trend we have what? Higher highs and what? Higher lows. So you can see this high here was taken out here, so you can't compare the distance between this high and this high. Definitely this guy here is what? Higher than what? This guy here. Okay, so we can clearly see that what? This is a higher high compared to this. And now you can't compare this low with this low. You can definitely and clearly say what? This is what? A higher low compared to what? This low. So when you come into the market and you say, okay, I'm seeing a higher high and a higher low, you should ask yourself, in comparison with what? What am I comparing the high to? Am I comparing the high to an overall high, or am I comparing the high to just a current high? Now if I look into this market right here, I can see that what? This is a high. Okay, I'm going into the market. Okay, this is a high here, this is a low. Okay, let me zoom in properly so you see it. This is also a high. Now okay, we can clearly say that this low is lower than this. This high is lower than this high here. Okay, this is a higher high compared to this one here. Okay, so clearly since the market is pushing to the downside, you can say this is a lower high, and now this is a lower low. What? Compared to what? Compared to this is a lower low compared to what? This low we have here. Okay, so I'll also be talking about fake outs and breakouts in subsequent videos. So that's why I say you should subscribe. You can see the important. I'm giving you nuggets on what will be coming up shortly. So that's why I say you should subscribe. So if you are not yet subscribed, like I said, you are missing out. So now this is a high, a lower high, lower low, lower low. Now this is a new higher high. Okay, so now the comparison of this high will be compared to what? The previous low, which is this guy here. So now this low, okay, which was a lower low compared to this high here, okay, now becomes what? A lower high. Okay, so let me mark them out so you can see. Lower low or lower high, sorry. Let me change the color. Okay, and then let me just do some markups so you all to see what I'm talking about. Permit me to just clear. Let me just remove all the drawings I have here. Okay, so I will be marking this up. So this is a lower high. Okay, so this is what? A lower high. And then let me change this color to black and then bring it to the right bottom, so it's going to come the other way. Okay, so this is a lower high compared to this lower high here. Okay, so lower high. All right, so you can see this is one lower high here, this is another lower high, and then we have what? A lower low, which is this guy here. Okay, and okay, and then we have what? Another lower low. Okay, there are some things I just need to clear out, but it will be in subsequent video. Okay, so now this low is lower than this low. Okay, and this high here is lower than this high. Okay, so once the market creates a new high, then we can see that okay, the trend is changing. So we have what? A change of structure. Now this guy here automatically becomes what? A higher high. A higher high. Okay, and then when the market creates a higher high, what do we expect? We expect a pullback. The market will not just rush all the way to the upside. We expect a pullback, which we'll be discussing in our next video or in our next section. Pullbacks. There are different types of pullbacks. The market may pull back to a high, a broken high. The market may pull back to Fibonacci retracement levels. Okay, so I'll be giving you my Fibonacci retracement level. I have some fib level here. You can see this is quite different from other Fibonacci you are seeing here, and my Fibonacci level gives me potential area of take profit also. So I'll show you how I'll set it in the next video. So that's why I say subscribe, my guys, subscribe. All right, so let's forge ahead. Okay, so like I said, charts are the key to technical analysis. Okay, like I've explained this. And then when using a bar or a candlestick chart, each period will give the technical analyst information on the price where it opened, the high, the low of the period, as well as the close. Candlestick analysis is especially useful as the patterns and relationship within them can assist in making forecasts about the future direction of the price. Once a trader has mastered the basics of charting, they can then make use of what? Indicators to assist in determining the trend. Technical analysis indicator. Indicators are used by technical traders when looking for opportunities in the market. Although many indicators exist, traders often make use of volume and price-based indicator. You need to take notes. If you don't have a note, man, you need to get book and pen, because things will be coming out, man. Get your book and pen and go through this video again if you missed anything. Okay, this assists in determining where the levels of support and resistance are. This indicator I use for support and resistance. It's a pivot indicator I'll be sharing with you, so stay. I told you I have something for you guys. Okay, so how often they are maintained or breached, as well as ascertaining the length of the trend. Okay, a trader, why is this guy misbehaving? Okay, all right, let me do it manually. A trader can view the price or any other indicator using multiple time frame analysis, which we'll be discussing. Top-down analysis from top to bottom, okay, ranging from 1 second to a month, which gives the trader a different perspective of price action. Now you can have a bullish trend. This is what I call trend in trend. Let me quickly rush through, then I'll go to the chart. I have some things I need to share with you before I call this video to a close. Okay, so the more popular indicators for technical analysis are moving average, relative strength index, which is the RSI, and moving average convergence and divergence, which is the MACD. Very important tool. Okay, moving averages and MACD are often used to identify trends in the markets, while RSI is typically used to determine possible entry and exit points. Indicator assist trader in analyzing the market, validating trade setups, and determining entry points. Like I said, indicator should not be the sole purpose while you are taking a trade. This is what we call confluence. Now, confluence simply means addition, 2 or 3 things, putting them together to give you a direction. Now, you can have a sound knowledge of technical analysis, then you pick 1 or 2 indicators that will help you filter. Now, the purpose of an indicator is to help you filter the noise around a price region or around a particular trade you want to take. Now, the reason why I use indicator most times is because I want it to be clear. Okay, it's not because I can't see it, but I want an additional confirmation. I can't do everything on my own, so I need assistance from what the market has to offer. Okay, so, and there are different indicators for different purposes. I know most people use certain indicator wrongly. All right, they use it wrongly because they don't know the purpose of the indicator. I will be taking certain indicator and I will be breaking them down so you know the purposes of this indicator and how you are getting it wrong. Okay, you should know what a particular indicator is for. You cannot be looking at an overbought region and then you should still be adding more buys. Okay, when the market is in an overbought region, you need to be patient and look to enter when it is oversold based on the trend. Okay, so these are things we will break down. Okay, we'll break down the stochastic, we'll break down the Bollinger Band, we'll break down pivot points and show you how to make use of them. So if you pick any of these indicators or you are using a particular indicator and you don't know the indicator purpose, the purpose of that indicator, drop the indicator on the comment section. I will be explaining the purpose of that indicator in subsequent video. So I will be throwing a shout out to you and I'll be mentioning your name and then answering your question. Okay, in subsequent time we'll be having a Q&A section where you get to ask me any given question you want to ask me, and I'll be willing to attend to your question. If you are yet to join the community on Telegram, the link will be in the description. Click the link, it's totally free. Okay, I won't charge you a dime. Click the link on the description section. You join the community. We have about 2,000 people there already, so don't be left out. It's growing, it's a growing community. Okay, so don't be left out, and share this video to your friends. Okay, so now let's go over to the chart and then see what we have there. Okay, so like I said earlier, the candlestick gives you what information of the opening price. Now let me go over to, let me zoom in, and then what I want you to do for me is, I don't know, okay, let me bring it down. Now look, come with my cursor. Now come with my cursor. This is my cursor. Watch where I'm taking it to, then you watch what I want you to keep your eyes on. Now watch, I'm going up, so keep your eyes here, this area here. You can see OHLC. All right, so now once I hover over a particular candle, you see the values. Okay, this candle here, now you can see the value of this particular candle, this bearish candle here. You can see the particular value. Let me bring out the horizontal ray. Now I'll place it on this candlestick. You can see my line here. So let's dissect the values of this particular candlestick. Now I'm on the candlestick, so what you see here now is, you see the high of this the open of this candlestick. This candle opened at 1.23. Let me see if I can zoom in. No, I can't zoom in. I can't really zoom into that level. 1.2398. The high of this candle you're seeing here, let me shift it a bit so you can see it. This gray candle, the high of the gray candle is 1.2399. The low is 1.2394. The close is 1.2395. Okay, you can see it's very close to what the open of that candlestick. Okay, sorry, yeah, it's close to the high of the candlestick. Okay, it's close to the high of the candle. Now if you look at the candlestick, you can see how the candlestick closed. It's a strong bullish candlestick. Okay, so candlestick gives you information of the market itself, what the market is doing. There's the way a candlestick will form, you know, okay, there's danger, you need to leave a particular trade as quick as possible. There's something that happened earlier today on GBP USD. I was shorting GBP USD, and then when this candle printed, there was a danger sign. Yeah, when this candle printed, it gave a danger sign. First of all, this was my first danger sign. I moved my stop loss to just this high here, and then I was taken out of the trade. Okay, though I lost few, but definitely I will regain it back. Right, which is very important as long as you are using a proper risk management. Okay, so there are other things I would love to share with you, but for the sake of this video, I'll be releasing the part 2 of technical analysis, where I'll be sharing with you strategies. Okay, so drop on the comment section, join the community, subscribe to this channel so you don't get to miss the part 2 of this video. Okay, thank you all for joining, and do have what a lovely day. Like I always say, don't forget to practice your risk management. Don't forget. Okay, I'm on Instagram at Dr. New FX. Okay, we also have our Instagram community. Dr. New FX is my personal Instagram if you want to chat with me personally. Then for our community, our trading community, we have at EMFOREX_academy. Okay, EMFOREX_academy. So don't get fooled or don't get played by. So this is it, EMFOREX_academy. Okay, on IG. Alright, and then you can drop me your message on IG. Then my own personal account is Dr. New, Dr. _FX. Okay, so